welcome on board Rahul Malani, who's joining us to talk to us about what exactly should we make of the banking sector updates coming in. He's joining us from Mirae Asset Sher Khan. Rahul, hi, morning. What do you make of the updates coming in, especially on HDFC Bank as well as Bajaj Finance? Very, very different in terms of one being weaker than expected, the other being much better.
So basically, firstly, good morning. My take on HDFC Bank is that overall the outcome is decent because despite weak loan growth and given that bank is in transition phase, numbers are broadly in line with our estimates on deposit growth front as well as the loan growth front. Deposit growth is bit softer when compared to quarter on quarter because quarter three comes with the festive season and there are most of the retail spends are there. But given the fact, we have to see that whether the bank is gaining market share or the market share is stable and does not lose. So on the deposit front, it continues to gain the market share. On the Bajaj Finance front, numbers are above our estimates.
Okay. For HDFC Bank, the deposit growth is high. Credit growth is not there, which means there could be pressure on the NIMs. Would that be a fair assessment, Rahul?
So basically, if you go through the last 2 or 3 months press release, they have either taken at least 2 times they have hiked the interest rates in the last 2 months. So basically, I don't think that there will be a pressure on the NIMs, but it will be manageable.
Bajaj Finance, completely different kettle of fish. From where are they getting growth?
So basically, if you track the asset mix of them, they have recently launched some of the new products and from which they are getting incremental growth. Like for example, when they slowed down the growth in the unsecured, they had increased the growth in the secured base. Like for example, old car loans, LAP, and all those things. If you look at the numbers from housing segments, also it remains strong. So overall, they are getting strong traction from the other existing secured plus new products launched in the last 1 year.
Rahul, what about some of the small finance banks? Because they continue to see that degrowth because of the MFI loans.
So basically, if you look at the business updates, majorly the numbers are broadly in line with our expectations. Major thing is to see that when does the collection efficiency start to improve. That would be the quarter where we should think of lapping the stocks because already there's a weak expectation has been priced into the stock prices. Stocks have already been beaten down. So in coming quarters or in management commentary, we should look at how when should be there. We should watch out for when does the collection efficiency starts to improve from which month or so. So that will be a point to lap into these names because I think so. The problem is not for the weak income growth, but it is of the over leveraging, which should be at least from our perspective. We estimate that it will be. This problem should be evacuated in H1 of FY26 by H1 of FY26.
H1, there should be some easing out. Rahul, what's the take on Kotak Mahindra Bank? Because the exit of CTO has come in as a bit of a negative surprise. Both Goldman Sachs and Nomura believe that this could be a near-term derating kind of trigger. And the fact that the approval from the RBI isn't coming through, do you see investors throwing in the towel just yet on Kotak?
So basically, I think so. This was on expected lines because of the RBI embargo on the digital and tech front. So I don't think so. There will be a major negative reaction. There could be a sentiment. This news is sentimentally negative, but already this is priced in the stock price because this had to happen because the RBI has not. There are no still now deadlines or favorable commentary from the management regarding submission to the RBI regarding this.
I appreciate your time and glad you could join us. 8:57.
If you like this video, then like, share and subscribe to ET Now.